Coen Jonker, thank you so much for joining us for this Mastercard and Emerging Payments Association Project Inclusion report that will be focused on values and lifestyle-based banking. We are really thrilled to have you with us. Thank you so much for your time. How are you doing, firstly?
Thank you. Thank you, Nizam. Joy to be here. Looking forward to the conversation.
Wonderful. So maybe I can start with asking just for a basic introduction to your own background and personal story, and especially how you got involved in the world of banking, especially digital banking in South Africa.
Nizam, I'm a trained human rights lawyer. Did in my 20s what many young people do, as I went after the money, became a mergers and acquisitions lawyer, ended up running the largest law firm in Africa. And around 2000 became very disappointed with the fact that it became clear in South Africa that economic emancipation does not follow logically or necessarily from political emancipation and political power. And we saw a country that was now by that time had been a democracy for 6-7 years, but the divides between rich and poor were just deepening. And so while busy with my MBA, I came across a Peruvian economist by the name of Hernando de Soto. He wrote a book, The Mystery of Capital, and he argued that it would be possible for a banking system, if sufficiently inclusive, to meaningfully impact on redistributing wealth and driving empowerment of people in a country beyond the ruling elites and the lucky few who were born with opportunities. And that sort of set me on a path to change career from being an M&A lawyer to getting involved in financial inclusion. In 2005, I was the first director of financial inclusion. At the time, we called it inclusive banking at Standard Bank. And it became clear to me there, although I'm very grateful for my experience in a big bank, that if we really wanted to do something transformative, it's not likely to happen in large institutions. So me and my business partner, Chart van der Walt, struck out in 2012 on our own to do something in the inclusive space. We spent the first 7 years or so of it doing as banking as a service for other people, but our dream was always to start our own inclusive bank. So everything came together for us in 2019 when we launched TymeBank in South Africa. And now, 2 years later, we've got Time headquartered in Singapore, with TymeBank being our first banking subsidiary, and with 3.5 million customers there, going from strength to strength. We've got our development and engineering team in Ho Chi Minh City, and we're in the process of building our second bank for the Philippines, which will be called GoTime.
What a remarkable story already, Coen. Thank you so much, and I love the sense of purpose that is laced through your career from human rights to M&A to financial inclusion. So clear as to why you created TymeBank. Could you maybe give us a sense of the characteristics of the South African context that made your proposition so important? And if I may ask, especially in the context of obviously the huge racialized separation that you had in South Africa, and how you early on were grappling with that from a financial inclusion perspective.
Nizam, sadly, South Africa is one of the most unequal countries in the world. And as you quite rightly say, that inequality continues to mirror the race divide created by apartheid and the history before that in South Africa. Interestingly, South Africa, technically speaking, is is quite a high level of financial inclusion. So we've got about 85% of people in South Africa have a bank account. That is largely driven by the fact that there's a very big social grants system in South Africa, and people get their social grants through their bank accounts. But if you scratch below the surface, you see that inclusion is extremely thin. And most people only use a bank account once a month to get their money out of the bank and then live for the rest of the month in cash. And once one starts looking for products that really help people in their everyday lives, you see that mostly financial services is both financially and emotionally very difficult for people to access. It's expensive, it's complex, and it's not well integrated into people's lives. So when we set out to build a bank, we had to get two things right. The first is we had to build a bank where the operating costs of the bank is so low structurally that we can afford to bank everyone. That was the first aspect. The second aspect is that we had to design products, services, and particularly distribution solutions that brought banking within reach of everyone, that made it truly accessible, physically accessible, emotionally accessible, and financially accessible.
So many things, so many avenues I want to go down, Coen. But allow me to ask the question, if I may, which is, you described the thinness of inclusion. So by the very definition of financial inclusion, as we know it across the world, which is about a bank account, by that logic, your markets actually had inclusion and were successful. How have you defined for you what inclusion success looked like from the very beginning?
Yes. The term that we used right from the start is the term underserved. So we said that lots of customers who have a little bit of service, but they are fundamentally underserved. And that inclusion actually means that we provide people with the tools they need to meaningfully integrate into the economy. And if you think about what does it mean to meaningfully integrate into the economy, it means I can pay and get paid in the same way as rich people get paid and pay. It means I can get money into and out of my account with the same ease that rich people get money in and out of their account. It means that when I save, I can get the same interest rate that rich people get. That when I want to insure against short-term risks as well as life insurance, that I actually have access to similarly sophisticated products, but that I can easily understand and integrate into my life. And ultimately that when I want to borrow money, I can borrow money, and I can borrow money at interest rates that do not in themselves represent a risk for my financial future, my financial well-being. And in order to put all of that together, I need to be able to relate to the brand that offers me this service. That brand has to be relatable, friendly, reliable, and not something that is as intimidating as that big shiny bank branch that I would have had to walk in before to get the service.
Cool, and you've touched on something which obviously any entity starting out in building a financial institution, addressing the underserved in particular, can really understand, which is finding that balance between allowing people to feel trust, security in the institution that they're a part of, but at the same time relating to it and feeling a sense of accessibility. Are you able to share how did that balance emerge over time? Because I can imagine, and I'll share, in the context of the UK, which is different, you have large financial institutions which most consumers are still attached to, despite historically, if you understand why people have concerns about the financial system, it's often those large institutions that cause the crises of the past, and yet we still are pinned to them almost. And so when you have new entities coming through, you have to try and deal with the inertia of old whilst building it. I'd love to get a sense from you, without giving the magic sauce, of course, because we wouldn't want that to happen, of how you maybe overcame some of that.
Nizam, we can spend the entire conversation just talking about this topic. I think it's an art. It requires a fine balance, humility, and I think a very thoughtful positioning. So there may be two aspects that may be worth highlighting. The first thing that we found was very useful in our initial approach to the market is to associate ourselves with non-financial services brands that have strong resonance and deep trust in communities. So when we launched in South Africa, we were very blessed to launch initially in partnership with Pick n Pay. And Pick n Pay is a retail group, but throughout the apartheid years, they were known as a very strong consumer advocate and trusted by people. In fact, across all brand categories, they're the second most trusted brand in South Africa. And so that brand association, along with a few other sort of non-financial services brand association, initially helped us overcome this question: are these guys fly by night? Is this a scam? Are they really a bank? And by being inside a Pick n Pay store that everyone trusted, we overcame some of that initial inertia. I think the second element that we found is human beings are smarter than we think. They see through the gimmicks and the surface. They do see to our intent. And something that we've put a lot of effort in is making sure that our brand has integrity, that we clear who we are, what we stand for, and that when we go out there and we represent what we do, we ask all the hard questions of ourselves, whether this is really us, whether this is really honestly what we stand for, whether we're willing to back this up. And driving a brand with integrity, I think, is more important than what particular positioning you adopt, what colors you adopt, what sort of image you adopt, and so on. What we also did, and now I'm on to a third topic, but I think maybe worth highlighting, is we were very deliberate in putting a lot of space in terms of where we position in the market between us and the conventional banks. So we made very sure that we occupy unique brand positioning in people's minds, and that brand positioning is far away from the existing banks. And that's paid off well for us. We now 2 years into the market, just over 2 years, we've got the best net promoter score in the country. We beat the best other bank just about with a net promoter score of 57. But we've got the highest net promoter score by far amongst low-income women, with a net promoter score of 69. As far as we know, the highest net promoter score ever for a bank in any segment in the population. And I'm excited about that for two reasons. The one is it means that our message has landed with our target customers. The second is that net promoter score is very highly correlated to relative market share growth. Mm-hmm. So it's commercially, it makes sense to get this piece right.
If you're able to, and as somebody who spent the last over a decade working in inclusion, I know how annoying a question this is, but I'm gonna have to ask it anyway, which is around when you are segmenting your base, and that base disproportionately, I'm sure, is racialized in a South African context because of its history. how have you developed and curated those products to take into account those racialized segments, whether it's internal without, because you don't want to other anybody externally. I'd love to get a sense if you're able to. And of course, everything that you share here is going to be broadcast out so that a lot more entities can hopefully learn from the great practice that you've been able to exhibit with the success of Time.
Yes, when we think about divides, whether they're racial divides, gender divides, class divides, the starting point for those of us who are privileged and have the opportunities to build things like this, which in itself is an amazing privilege. The starting point is not to think that you are the client or that you are the customer, because you're not. And I think it's the ultimate hubris and arrogance. People going, I know what you want, and I'm going to design what I think you want. I used to teach the subject of doing business in underserved segments at business school. And I would say to my students, the mother of innovation is not intelligence or creativity. It is compassion. It begins with actually immersing yourself in the life of your customer and truly deeply respecting your customer, the life they live, the courage with which they live their lives, and asking them the questions and going on the journey with them. And so we think that, proper research and proper, not just quantitative research, but proper qualitative research immersion is the starting point of a good set of financial services products. After you've done all that and you've designed the first product and you've put it to market, if you're lucky, you're on the right island, but you still haven't found the treasure. The process then is to continue to explore with your customers and continue to evolve your products as you learn from your customers. And here's an interesting thing. We do 40 code drops in production every week of the year, except for Tet, for Vietnamese New Year. And 60% of are new feature related code drops, which means we have done more bank building since we launched TymeBank in South Africa than we did before we launched TymeBank in South Africa. Wow. And you can almost not recognize our current propositions from our starting propositions. And that's the amazing thing. The most exciting part of this journey is the moment you're in market, your customers start teaching you. And if you're humble enough to listen and to learn and to understand their priorities, to really try and understand their priorities, they take you on a journey. Your customers take you on a journey as to what it is that they really need, what it is that really irritates them about you and the way you thought you heard them the first time. And it's a constant evolution. And I think this is true whether we talk about serving underserved or excluded customer segments, or serving any other customer segment, that it's the pace at which you can iterate your proposition in response to your customers that will ultimately determine your success, not necessarily how good your launch proposition was. And then I should mention one other thing that's very important. Bringing your customer into your workplace, in other words, making sure that you have the diversity inside your team that reflects the customer base you serve. It's almost embarrassing to mention it, but I see people actually missing this point. You absolutely have to get that right if you want any chance of getting it right.
What do you think of the concept? Because of course, this report that we are, which Algebra is honored to be authoring for the EPA and Mastercard, is around lifestyle and values-based banking, which is very much around, consumers have needs which extend beyond just a financial product. It might be ethical, environmental, religious, and so on and so forth. How important a concept is that as a general rule? And how important has it been for you, especially in the context of such a beautifully diverse set of consumers that you have in a South African context?
Nizam, I get really excited when I hear you describing this idea of developing financial services solutions that integrate into people's lives, their values, and is able from a design perspective to meet needs beyond call it the pure technocratic financial need of being able to do a payment or save money. And I think that part of what is exciting about the times in which we now live is that technology and our understanding of design has evolved to a point where we can actually now do these products. Mm-hmm. A lot of how financial services works today is not a function of how financial services should work or how we'd like it to work as humans, but it's simply a function of the historic technical limitations on how financial services worked in the past. But now we can actually transcend these limitations. It's possible to transcend these limitations. Sorry, I've got a cat here who's just decided to come and visit. And so it is now technically possible to design products that are fully integrated into people's lives, into the flow of their lives. And as you've quite rightly said, this can cross many different dimensions. It can be integrated into the processes that people engage in when they shop or when they exercise their religion. It can be integrated into their values in the way that it makes transparent to them the underlying aspects of the transactions that are important to them. It can be integrated purely from the perspective of ease of use into how they live their lives. And I think we have only begun to imagine the extent to which these integrations can happen. I remember reading a long time ago that the ultimate complement for a design is that design disappears. It becomes so part of your life that you no longer notice that it's there. Like the tar roads on which we travel, which we only notice if there's a pothole or there's something wrong with the road. And I think financial services can become like that. They can, in many respects, they can start disappearing. In other respects, they can become a delight rather than just a chore. Because if we have to be honest, and as bankers and financial services people, we have to say this to ourselves. Nobody gets up in the morning with an excitement about having to open a bank account today or make some payments. It's always a means to an end. And I think this whole idea of embedded contextual finance is going to be the way to go. And the people who get it right are going to be the winners. And that requires us to both understand what technology enables us to do today, which it hasn't in the past, but also at the same time to deepen our compassion for the people we serve, to ask, to really get under this question. If I was this person, how would I ideally want this thing to work for me in my life? And by asking the person the right questions and then going to the effort to design the right solutions, I think we're going to do very interesting things in the next generation of digital finance.
How has, and I think we've started talking about the relationship between the digital offer and, let's say, the traditional offer, and the two, of course, are going to merge very quickly, and traditional will become digital, and you can't distinguish between either of them. How has the landscape of financial services changed through the development of time?
Maybe let me start by making a point around the fundamental differences in the infrastructure and in the and in the operational and business design aspects of a traditional financial services institution and a truly digital financial services institution. People tend to sometimes get this wrong. They think a digital bank is just an old bank with good apps and no branches. And actually, the difference between those two worlds is far, far deeper than that. It actually has to do with the deepest elements of design, of how you design your technology stack. Do you run on your own hardware, or do you run in the cloud? And how many people do you need to do the same job? To give you an idea, in South Africa, we employ 230 people in TymeBank. We have exactly the same products and a wider distribution for sales and service and cash management as the big banks. The smallest of them employ 14,000 people. So we do with 230 people what the smallest other bank that we compete with do with 14,000 people. And that means that there's a fundamental design shift, design change. And it's a structural cost advantage and design advantage that you can't tweak that institution with 14,000 people. You can't tweak that into becoming like us. You have to build it from scratch. And that actually means that the entire operational model is an order of magnitude more cost effective. And what that allows us to do is to share a piece of that economic pie with two other groups. The one is to share it with our customers in the form of providing things more cheaply and giving people better interest rates. The other thing that it does is it allows us to share that with partners. And why is that important? It comes back to this whole dream of embedded finance and of contextual finance. Because the person who allows you to embed yourself inside the ecosystem requires a piece of that economic pie in order to make sense of it from their perspective, to include you. And so designing from a very different standpoint is an important part of it. How does it change? Hopefully it does exactly what you've described now. It creates a world where the barriers of exclusion come down, where what you and I take for granted in terms of access to finance and to the tools to participate fully in the economy, that everyone can take that for granted. And that's what we measure. We measure how many more people can take for granted what middle class and wealthy people already take for granted. And the answer is it's only when the most vulnerable person in the economy can use the same tools of inclusion that we will have succeeded. For a while, I had a screensaver, which was a beggar in Shenzhen, that he had a QR code on his cup, and you could use any of the payments mechanisms in China to send him money with your phone, with a QR code on his cup. If we can live in a world where the most marginalized and vulnerable members of our society have the same tools to their disposal, we will have done our day jobs.
How have you integrated your values, your principles across your business?
I think integrity starts with never getting on your high horse and concluding that you've arrived in terms of integrity. I think that we all are people of mixed intent. We all sometimes lack integrity. And having people around us who are serious about it, who are sincere about it, and are willing to call each other every time we do something where we compromise, every time we do something that may be ever so slightly misaligned with how we see ourselves, I think is the starting point. So picking the right people, having the right people around you, I think is important. The second is to foster, I think, a culture of self-criticism, of not taking the job seriously, but not taking yourself seriously at all. And be willing to constantly acknowledge your mistakes, constantly criticize yourself for things you could have done better, and making that part of the culture. I think there is nothing more dangerous than people who become self-righteous just because they're trying to do something good. And, I cringe even sometimes when I listen to myself. I think one could so easily stray into sounding self-righteous. So I think a lot of it is just about that humility. It's about creating very robust feedback loops and listening, constantly listening for the criticism. If we think about sort of building a business with integrity, I think it's like becoming a world-class athlete. You can only do it by constantly focusing on where you're still falling short, and then working on that a little bit more. And I have no doubt that when I look back in the years to come, and when our team looks back in the years to come, we will find ourselves wanting. We will find that we could have done much better. But it's okay, because at least we're getting up every morning trying our damnedest.
Coen, a very, very powerful reminder, and I think a very good place for us to end this conversation. Thank you so much for taking the time to be a part of this EPA Mastercard Project Inclusion reports interview for our values and lifestyle-based banking. We cannot wait to get this out into the world so that everybody else can also be inspired and learn from your wisdom. And we wish you the best of luck with Tyme's expansion.